Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are analyzing 4 main stocks and companies. In our first article, we're going to be talking about a company who could literally have a giant short squeeze, which will cause their overall stock price to surge upwards. So I want to make sure you're aware of this so it's on your radar. Then we're going to move on and talk about Sofi Technologies SOFI stock regarding the various regulatory policies coming out about Sofi, their banking institution, as well as their cryptocurrencies, and how this is negatively impacting their overall price predictions, as well as when this company is set to become profitable. We're going to then use this information to determine if this company is still a good buying opportunity in the stock market right now. Then we're going to move on and talk about the electric vehicle company named MULN Automotive, ticker symbol MULN, which literally is about to receive a very negative catalyst, I think, on November 30th. The reason for this is because they were supposed to deliver around 300 vans to one of their consumers, but it doesn't seem that that has happened as of right now. So we're going to be going over the implications of this if they have not and did not send out 300 vans to their customer despite a binding agreement with them. And then lastly, we're going to talk about NIO's NIO Stock, and NIO is another electric vehicle company that is entering into its high growth phase. And the best part about this is that it's reflecting exactly the same type of growth in their overall deliveries and revenues that Tesla experienced when Tesla was at the same phase as NIO. So for more videos on the latest news updates in the stock market, Sofi Technologies, MULN Automotive, or NIO, remember to go and smash that like button right now for more videos just like this one. Subscribe if you are new, comment down below what you think of any of these companies, and without further ado, let's jump right into today's stories. So COSM Holdings, ticker symbol COSM, and their share price is currently trading at 70 cents per share, and the share price has already been surging. And what I mean by this is literally the COSM share price has surged by more than 100% at one point. Many investors are piling into this company because they are predicting that it's in the middle of a short squeeze, which is helping drive the price higher of this particular stock. Now, I want to tell you that I don't plan on buying this company or betting that it will short squeeze, but I have no problem of putting this on my radar or just watching to see what happens. If you haven't heard of this stock before, don't worry. Essentially, COSM Holdings is a small cap company which is only worth and valued at around $33 million at this time, and the stock trades below $1. However, many investors don't think it's going to stay below $1 for long because of the massive short squeeze that could happen. For instance, at its highs, the shares were up almost more than 870% from the November low. And this means out of the last 10 trading days, 9 of those days, the company has been extremely green, generating double-digit returns for investors. Now, if you are a stock trader, this could be a great stock for you to do research and get into before it's too late. Now, I am more of a long-term holder, so I am not going to jump into this company, but I want to make you and other stock traders aware that this company could continuously trend upwards, at least in the short term. Now, I do want to make you aware, despite this, the COSM stock has fallen around 89% year to date, and it's just experiencing somewhat of a short squeeze right now. But will this continuously short squeeze, and could we get an even bigger short squeeze? Because according to MarketBeat, more than 90% of the COSM stock is sold short. However, this data is somewhat cherry-picked in the sense of other sites have a much lower reading than a 90% short interest. But regardless, if a short squeeze happens in this company and the stock price will surge upwards, and it could give you fantastic quick returns. Now, by no means would I ever advocate for you to go all in or even invest a sizable amount into this particular company. I just want to make sure that this is on your radar, and again, I will not be participating in this because for me, it's speculation on whether or not the company will continuously short squeeze. If you're not familiar with this company, COSM Holdings is an international healthcare group company, and it's headquartered in Chicago. It operates through many subsidiaries in Europe as well as the United Kingdom, and it has multiple business segments and units that are involved in pharmaceuticals and food supplements along with other products. COSM stock, according to many, won't be trading for less than $1 for long because they believe the share price will continuously trend upwards, especially if the shares end up short squeezing, which will cause the stock price to absolutely skyrocket. So again, the ticker symbol is COSM if you want to do further research into that if you are a stock trader. But for long-term investors like me, and if you have a similar investing style as me, I'm going to sit this one out, but I wish wish you the best of luck. Up next, we have a company which is SoFi Technologies, and we've been reporting on the stock for quite a while. Currently, the share price is trading at $4.50, while professionals believe the company should be worth anywhere between $6 and $10 over the next 12 months. SoFi Technologies is a financial services company that operates as a digital bank, and it has a load of support and hype behind it from very long-term investors. However, if you've kept up with this company, you would know that SoFi has been under fire lately from lawmakers and Congress regarding its overall cryptocurrency activities, as well as the overall student loan moratorium being extended on top of the student loan forgiveness coming from the Biden administration. All three of these things are acting as very negative catalysts for this company, and it's artificially suppressing the share price of this stock. The student loan moratorium has nearly been enacted and in effect for 3 years, and this essentially puts a pause on student loan repayments, at least on the federal level, and these student loans also don't accrue interest. The reason President Joe Biden extended the student loan moratorium again, despite saying that he wouldn't extend the student loan moratorium, is because his overall student loan forgiveness plan was shot down, which could relieve as much as $20,000 worth of debt per individual among student loan borrowers. And again, this is suppressing the share price of SoFi Technologies. This will also negatively impact the overall projections for SoFi's 2023 revenues as well as their earnings potential. This means that the company may not become profitable at the end of 2024 as previously forecasted. Another reason why the SoFi share price is being somewhat capped right now is because they are facing crypto issues and potential allegations. Ever since the cryptocurrency trading platform FTX ended up over-leveraging themselves and it happened to be a complete disaster, lawmakers are now becoming skittish around other cryptocurrency trading platforms and/or exchanges, which would include SoFi Technologies. This is why lawmakers from the U.S. Senate Banking Committee sent a letter to SoFi Technologies expressing concern about SoFi's crypto activities and their overall banking activities, because they don't want the same thing that happened to FTX to also take place in SoFi. However, I don't believe this would ever have happened to SoFi Technologies if the FTX meltdown never happened. It seems that SoFi Technologies is being targeted somewhat because I don't see many other letters going to other companies. It's interesting that this is happening specifically to SoFi, but I don't want to read too much into it. And this also doesn't mean that other letters won't be released to other financial institutions in the future. However, if this ends up uncovering some risky banking behavior and or cryptocurrency behavior among SoFi Technologies policies, this could act as an absolutely tragic negative catalyst for the SoFi share price, pushing the stock well below $3 per share, which would be catastrophic. So this begs the question, should investors be worried about SoFi? Well, first let's put this into perspective. The three problems right now, which is the extension of the student loan moratorium, student loan forgiveness, and their crypto policies, are all going to be short term. Eventually, the student loan moratorium will end, the student loan forgiveness will either go through or it won't go through, and I personally think that the crypto-related concerns are somewhat overblown right now. But despite this, we could see the share price drop even lower in the short term due to these potential risks. Many investors also don't like the way management is running the company right now, which is causing them to lose hope in this overall company. On top of that, many investors have properly pointed out that the overall expenses for this company running is relatively high, and the stock price is not necessarily cheap because the share price is trading at 36 times their adjusted EBITDA. But with the overall growth of this company, that number is going to substantially decrease as time goes on. So investors are definitely becoming less bullish on SoFi Technologies, but over the long term, it seems that investors are still going to have very good upside potential and opportunity in this stock as long as you're willing to hold this company until or even after it becomes profitable. The next company we're going to talk about is an electric vehicle company named MULN Automotive, ticker symbol MULN, which trades for 19 cents per share. So in this video, we're getting 2 penny stocks here. But I think this is going to be catastrophic, and I think that the MULN share price is going to drop considerably. For instance, MULN Automotive, which is an electric vehicle manufacturer, has a binding agreement that they signed with Delpak Logistics. So essentially, MULN Automotive signed a binding agreement with Delpak Logistics to where MULN Automotive will create, manufacture, and send/deliver 300 Class 2 cargo vans to Delpak Logistics. And this delivery date could be as soon as November 30th, and that's what many investors were expecting. But we haven't heard anything from from this deal. We are literally on the brink of the due date for this, and nothing has been heard of. There has been no releases by either company, and this is going to act again as a big negative catalyst for this company, which is going to drop the share price even further. Another problem is that the CEO of MULN Automotive supposedly said that, and I quote, a major Fortune 500 company, end quote, has supposedly made an order for MULN's cargo vans, aside from Delpak. But the problem here is he says that that announcement would be released to the public during the second quarter. Well, now we're in the third quarter, and considering that we're well past the second quarter, there has been no announcement made of this, in my opinion, fictitious, giant Fortune 500 company that made a deal with MULN. This has led investors to question the capability of MULN's vans as well as the honesty of their overall management. They are not delivering on time for Delpak, and they technically lied about releasing further details about a Fortune 500 company ordering from them during the second quarter. But as we see, MULN has not kept their promises in either of these regards. Also, like I've said in a previous video, the company will be undergoing a reverse stock split, which will be voted on by shareholders on December 23rd, which 100% will go through, by my opinion, so they can maintain their listing on the NASDAQ as well as the Russell 2000 and 3000 indices. The reason for this is because these indices, such as the NASDAQ, the Russell 2000, and the Russell 3000, require a company to have a share price at minimum of $1 per share to maintain their overall listing on that indice. So this is not really a good news update for MULN, but I just want to make you aware of this, that the share price could drop even further. But I would love to hear your comments down below. Lastly, we're going to talk about another electric vehicle company, which is NIO, ticker symbol NIO. NIO is entering their growth phase, and their growth is scaling just like Tesla did in the beginning. Right now, the NIO share price is trading at $10.80, while experts in this field believe the company should be worth anywhere between $11 on the low end and $49 on the high end. The NIO share price has fallen by around 73% over the last 12 months. However, long-term investors are still very excited and confident about this company's ability to scale. In the beginning of 2022, there was a huge technology and growth stock sell-off and a surge in US Treasuries. Not to mention there has been lockdowns over in China, which hampered overall production and supply chain, which again acted as a negative catalyst for NIO. But despite this, it's worth noting that NIO's performance has improved year over year and even throughout the year. For instance, in quarter 3, NIO's vehicle sales jumped by 38.2% year over year, where they generated $1.68 billion worth of revenue. On top of that, they delivered around 10,059 vehicles in October of 2022, which represents a massive increase for their overall delivery growth of 174.3% year over year. This is similar growth that we experienced from Tesla, and the management of this company, as well as professionals and experts that analyze and perform analysis on NIO as a company and the stock, believe that this growth is anticipated to continue well into quarter 4. Various commentators have commented that the company's growth is resembling exactly what Tesla went through in Tesla's beginning phases. So they are not saying that NIO is going to be the next Tesla, but they are saying that it's growing similarly to the same growth trajectory, just at a lower scale. I also want to point out that NIO's technology has also improved substantially. The proof of that statement comes from their ET7, which has a range of 1,000 kilometers. And that puts NIO ahead of Tesla in terms of their overall range for the majority of their vehicles, although the testing differs between NIO and the metrics they use and the testing that Tesla goes through. But all in all, it seems that analysts are still bullish on NIO, and it seems that they have a very positive future ahead of them. On top of that, they currently trade at a price to sales ratio of just 2.8, which is far less than what Tesla is trading at right now, which is currently 7.5. So between these two, technically NIO is the cheaper company to buy. However, there is great political risk here. NIO is headquartered over in China, so depending on US and China relations and the political environment, this will cause the stock price to increase and decrease, or even potentially be delisted, depending on what happens with the overall politics. But I would love to hear your thoughts down below. That's something just to be aware of. And if you want any more stock news updates on any of these companies or other stocks, go ahead and comment down below, smash that like button for more videos like this one, subscribe if you are new, and I will see you in the next YT video.